Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting on the 4-hour chart with the bullish scenario where we are looking for a 5-wave impulsive structure to the upside where we're waiting for this wave 3 to end, for then a sideways corrective structure in wave 4 and then one more impulse to the upside in wave 5 in 5 waves, and after wave 5 we then expect a bigger corrective structure to the downside. The common target area for a wave 4 is between the 0.236 and the 0.5 Fibonacci, taken from the low of 2 to the current high that we have, giving you a target area between 50.3k and 47.3k. The invalidation for this wave 4 is the 0.618 at 46k. If we then zoom into this structure over here, as we are looking for this wave 3 to end, then we have to go to the 15-minute chart. Here we are then looking for a 5-wave impulsive structure inside the blue wave 5 to then finish the green wave 3, right? 1, 2, 3, 4, 5. This is still a bullish count where we are looking for at least one more high. If I put wave 3 to the left and wave 4 to the left as well, then the only way to get a finished structure in a wave 5 is a diagonal structure, because this move to the upside here is very much a 3-wave structure, as you can see, not ideal. However, an expanding diagonal is very, very rare and therefore not preferred. Another option is that we move this wave 3 either to the right here or even all the way to the right over here, and we are still looking for a wave 4 to the downside, where we have a flat structure over here to the downside in a wave A, B and a wave C. The common target for a wave B is between the 1.236 and the 1.38 Fibonacci, and you can take this fib from this high to this low or this high and this low. Doesn't really matter, as the result over here is the same, and this move then to the downside remains a wave C. However, this is then a running flat structure at the moment because we haven't yet taken this low over here. But price might actually do so, because if we are looking for continuation to the upside in a wave 5 from this low over here, then we want to count impulsive structures to the upside. So 1, 2, 3, 4, 5, where the 886 is a rare target for a wave 2. Also, this move to the upside looks very much like a 3-wave structure, not a 5-wave structure. So if this would be the low and we are looking for a wave 5 to the upside in this bullish scenario, then the probabilities are low that this is the low that's going to start a wave 5 to the upside, because first of all, 3-wave structure. Secondly, if this is a 1, 2 and somehow a 3, 4, 5, wave 2 hit the 886, rare for a wave 2, common for a wave B or a wave X, increasing the probabilities that this move to the upside is part of a corrective structure, and therefore it increases the probabilities to take these lows at a certain moment. However, if we're looking for this low to be taken and eventually the high, then this would be the scenario here, where we are still looking for this impulsive structure, but this is now the common target area for wave 4, taken from the low of 2 to the high of 3, giving you a target between 51.8k and 50.9k, with the invalidation being the 0.618 at 50.5k. Also over here, this structure to the upside looks 3-wavy. It is quite short for an ABC, increasing the probabilities that this is a wave B high at the moment. In the bearish scenario on the 4-hour chart, we are looking for a 3-wave move to the upside in a wave A, B and a wave C. Because this wave C is so extended, moving towards the 2 trend-based fib extension, taken from the low to the high of A to the low of B, the probabilities are higher that this is an impulse to the upside. Reason is, the 1.618 is still a relatively common target for wave C, but moving past the 1.618 really improves the probabilities for an impulse instead of an ABC. However, we always have to keep a bearish scenario in mind. As Elliotticians, right, you always need a bullish and a bearish scenario, and at the moment this remains the bearish scenario. The invalidation for a wave 4, as mentioned earlier, is the 0.618, which would be a confirmation for an ABC to the upside if price would do this. If we go to the lower time frames over here to the 5-minute chart and look at these CVD divergences, then we have bullish CVD divergences here at the low, but also a bearish one here with this 5-minute order block. Lower high on price, higher high on the CVD. Now keeping in mind that we also have an 886 touch over here, it does increase the probabilities for that bearish scenario, even with a double bullish CVD divergence here at the lows. Now for the bullish CVD, it is important for price to move above this high over here to invalidate the bearish CVD divergence and then look for upside where this bullish CVD divergence has the target being this high. This bullish CVD divergence here has this particular high as a target, and the bearish CVD has this low as a target, right? But remember, we do have the 886 down here. So if we then look at the probabilities of the different scenarios, then on the 4-hour chart, the probabilities at the moment are higher, that we are looking for an impulsive structure to the upside, where we're keeping an eye on a wave 4 after wave 3 is ending, for then one more push to the upside in a wave 5, after which we expect a bigger corrective structure. On the 15-minute chart here locally, the probabilities at the moment are higher for price to take this low here, as we have an 886 touch at the low as well as the bearish CVD divergences. Of course, we also have the bullish CVD divergences, but the move from the low here locally looks very much like a 3-wave structure plus 886 touch over here does increase the probabilities to eventually take this low, even if you would move to the upside a little bit more. Now generally, however, the move to the upside is slowing down. We are grinding here towards the upside. We have a bit of a volume decrease as well, so that is important. And also we are getting closer to 4-5 territory. In this wave 5 over here, we're looking for 4-5 territory, as well as on the higher time frame eventually for a bigger wave 4 and eventually a wave 5. And 4-5 areas tend to be more complex. It's especially the most complex part of an impulse, so make sure to have your risk management sorted and have a clear plan and a clear strategy with solid entry requirements. So far, however, we didn't yet fill the monthly gap towards the upside over here. 53.3k is not yet touched. The first support area to the downside is the 2-hour gap top at 51k, as you can see. And if I then open my other folders, then we also have a daily naked point of control at 51.6k, and then we get into the green area for potential wave 4, where we have some support at 49.7k, 49.1k and 47.3k. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.